All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And oh man, anyone who's been around the channel for a while knows we're big Alibaba bulls, and down 6% today. That hurt a lot. So we're going to discuss the news story that kind of brought this about and give us our take.
Yep. If you like this kind of entertaining stock market content where it's two stupid guys trying to figure everything out, give us a like and subscribe.
That will get to it.
Two stupid guys trade stocks.
I'm fairly certain that the like button is still linked to Alibaba stock performance. So if you give this video a like, hopefully we'll have a green day tomorrow. So counting on you guys.
Oh, that'd be great because this was rough.
Yeah, it was. Down 6% today.
Yeah, look at the fun gap down. We had closed up the day before at 122. We closed today at 115. Obviously, this is just a huge gap. It didn't actually trade a lot intraday. Basically, the big line of support that everyone's looking at is the 109, 110 level. We've hit it once, twice, three times. We went a little bit past it here. So hopefully, I don't really even want it to test it, but that is the level that everyone's looking at. It's gone down so much already.
I know if it breaks 110 on support, then on volume, then I hate to say it, you might have to recoup some of your losses by shorting it in the short term.
Yeah, I'll day trade it. That'll work.
Yeah, exactly. So this was the news story. Basically, multiple outlets carried it today. It was a result of an SEC filing actually that took place Friday. Wish I had been aware of this sooner because we could have brought this news to you guys a little bit sooner. But alas, all the major news outlets covered it today. Basically, Alibaba filed to create up to 1 billion new American depository shares. And the size of that kind of, they only had about 2 billion in existence prior to this. The initial IPO was only 2 billion shares. I'm sorry. Tells us that it's a whale move, as in someone very large will be involved in this. And the pretty obvious target here is Softbank. Softbank was a pre-IPO investor in Alibaba Group. They own 24.8% of the company. So that roughly, kind of makes sense. They'd actually, in order for them to completely liquidate their holdings, they would have to create about 670 million ADS shares equivalent would be what the, kind of translation would be. So yeah, this is definitely interesting. Softbank has been pretty highly tied to a lot of Chinese tech, and it makes sense that with their own stock being down 40%, that they might be trying to raise a little bit of cash, and that's why people are kind of thinking that they may be the one looking to offload a little bit of their Alibaba holdings here. Yeah, so Softbank actually had a green day.
Oh boy.
Yeah.
The good news is we know it wasn't Munger because he just bought some.
Yeah.
So that helps.
I know, right? He's constantly picking up a few shares here and there, so we'll see what happens. But yeah, Softbank shares down 50% from their peak last year. Not exactly mirroring Alibaba's performance, but not far from it. So this is actually overlying graph here as far as the returns, and now you're starting to see this divergence. Interesting. Yeah.
Fantastic.
I know, right? We'll see what actually becomes of it, because logically what people are kind of surmising in terms of this makes sense. But Softbank has declined to comment. Alibaba themselves have been kind of mute in terms of what happens there. Their earnings are expected in the not too distant future, so maybe we'll get a little bit more insight about where they are and what their kind of short-term plans are at that point. But if you look on the Nasdaq's website, list one date. Actually, I think CNBC had today listed pre-market as their earnings date.
It's not accurate ever. Yeah, hopefully we can get a little bit of good news once, just once, one day, and then you can continue to slaughter it.
Yeah, it's fine. The way I always look at this sort of stuff too is I'll judge myself on this kind of stock's performance in a few years. Then we'll see if I was right.
That's fair.
All right, guys.
All right, dudes. Yeah, let us know if this scared your investment. Have a good one.
Yeah, see you in the next one.